Hello, Cryptowisers. Welcome back to the channel. My name is Milton, and I will be your captain for this episode. In today's episode, we're going to have an in-depth look at Mark Cuban's Crypto Defi strategy. That's right, Mr. Shark Tank himself. He came out with a blog and outlined exactly what he's been doing in DeFi. So we're going to go through it in detail, walk through every project that he mentions, and give our 2 Satoshis on his strategy so you know what to do. Buckle up, because this is going to be another exciting episode of Cryptowise. All right, Cryptowisers, let's get into this. If you're watching this video, I assume you know who Mark Cuban is. He is number 655 on the Forbes list with a net worth of $4.4 billion. One of the stars of Shark Tank, owner of the NBA's Dallas Mavericks. Anyway, he has been getting more and more into crypto. This has been one of the major factors of this bull run. Business, investing, celebrities like Mark Cuban getting into crypto and using their platform to spread the word. Obviously, this can be good and bad. We've seen the bad with Elon Musk embracing crypto, then going against crypto. But overall, I think this has been really bullish for crypto. And I think Mark Cuban has been one of the most consistent in his message about crypto, one of the most curious. Definitely seems like he's getting into the nitty-gritty of crypto. That started with NFTs. He launched his own website, lazy.com, which he describes as the lazy way to show off your NFTs. But more and more, he seems to be understanding DeFi, getting into it. And yesterday's blog post is proof of that. So he published this yesterday on his Blog Maverick site. That's blogmaverick.com. And he does a really great job of explaining the basics of decentralized finance. This is definitely aimed towards newbies or people who don't have a lot of knowledge in DeFi. But as someone who has been doing a lot of DeFi for a long time, I still found this very interesting to get a sense of how Mark Cuban sees the industry, where he sees it going, the types of things he's finding exciting right now, what he's invested in, how he's using it. So I hope this will be an interesting video for both new and experienced DeFi users. So let's dive right in. All right, Mark Cuban begins. The brilliance of yield farming, liquidity providing, and valuing crypto projects. I'm going to make this as simple and straightforward an explanation as I can. Yield farming via staking and liquidity providing are a core feature of most, if not all, decentralized DeFi projects. The principle behind why they are brilliant also applies to other crypto projects, but let's put that aside. But first, let me say that this is not investment advice, and let me, Milton, second what Mark is saying. This video is not investment advice. I'm only walking through what Mark Cuban's talking about, and what he's talking about is not investment advice. All right, let's move on. First, side note, one of the reasons I am doing this video and why I really like this blog post is you're getting insight into a guy who has had a lot of success in traditional business. Basically saying, yes, you can value crypto in the same way that you can value traditional businesses. That has been an argument I have heard from my friends in traditional finance forever. They don't know how to value these crypto projects. Well, Mark explains this very well, and this is one of the reasons I wanted to go in depth on this blog post. He says, the first question you have to always ask about any DeFi is the same question you need to ask about any business you may create a financial relationship with. What business are they in? Yes, every single DeFi project is at its core just another business. They may or may not know what business they are in, but they are just another business that happens to be using a blockchain and smart contracts to host and program their business processes. Let me give you an example of some DeFi and blockchain projects I've placed some money with and how I view their business. So the first one he talks about is Polygon/Matic. And the reason why it's slash is it used to be called Matic and they recently rebranded to call themselves Polygon. He describes them in this way. They are a very simple business that is hard to execute on. Their job is to provide tools that enable transactions using their Ethereum/Solidity smart contracts, built primarily by outside parties to take place as quickly and inexpensively as possible while still being able to bring in more money than they spend. In order to do this, they charge a fee per transaction. That fee is paid using their Matic token. So much like you buy your Dave and Buster tokens in order to play their games, you must buy Matic tokens in order to use the features of their network and smart contracts. But blockchain-based businesses diverge quickly from traditional software, and the difference is where the brilliance of crypto-based businesses like Polygon/Matic and their competitors from BTC to ETH and even to Dogecoin come in. The first thing I find really interesting is that he skips over Ethereum straight to Polygon. Most people who go into DeFi first go straight into Ethereum, and I assume that Mark Cuban did the same thing, but that he's moved on to Polygon in the last few weeks. So for those of you that don't know, Polygon is essentially a side chain to Ethereum. You might have heard of Ethereum, which is the main smart contract network, main blockchain that most DeFi is built for, happens on. But because the gas fees on Ethereum got really high and the congestion was really bad and will be for the foreseeable future before Ethereum 2.0 comes out, there have been different projects coming out to solve those problems, and one of them is Polygon. And they describe themselves as Ethereum's Internet of Blockchains. Polygon is a protocol and a framework for building and connecting Ethereum-compatible blockchain networks, aggregating scalable solutions on Ethereum, supporting a multi-chain Ethereum ecosystem. So basically, any DeFi project, any DeFi dApp that was built for Ethereum can be used on Polygon with the same language, same coding, everything. So it's very easy for them to just add Polygon to their services. As it says here, built by developers for developers, Polygon combines the best of Ethereum and sovereign blockchains into a full-fledged multi-chain system. Polygon solves pain points associated with blockchains like high gas fees and slow speeds without sacrificing on security. This multi-chain system is akin to other ones such as Polkadot, Cosmos, Avalanche, etc., with at least three major upsides. It is able to fully benefit from Ethereum's network effects. It is inherently more secure, and it is more open and powerful. Now, I've been late to the game with Polygon. I actually don't use it yet. This week, I'm going to be spending a lot of time looking into it, starting to use it. I want to do some stablecoin yield farming, and I'm going to do that on Polygon. So it was interesting to see that that is where Mark Cuban is, and he's doing a lot of his DeFi already on Polygon. Now, those of you who watch the channel a lot will know that my blockchain of choice or my ecosystem of choice is actually going to be Polkadot, but because it hasn't launched yet, I am looking for alternatives to Ethereum and Binance Smart Chain right now for yield farming and stuff. So I am finally going over to Polygon. I know, I am very late to the party, but that's life. Anyway, back to Mark's blog. So he's talking about the difference between crypto projects and traditional banking or financial companies. And he says, every business or financial software service or application business has cloud computing and operating costs that very often grow faster than their revenues. This is not a surprise. It is exactly why software companies raise significant amounts of capital in order for their software to eat the world. Companies like Polygon's capital needs are very different. Why? Because rather than building their businesses exclusively on a cloud computing platform like AWS, their businesses are decentralized. The foundation of decentralization is built upon an independent party, usually called miners in proof-of-work networks like BTC, or validators in proof-of-stake networks like Polygon Matic, and a few other crypto descriptive words, putting up their own capital to provide computing resources in order to support the network platform. Brilliant. In any other business, you have to raise a shitload of money in order to host your own servers, or more likely pay for cloud computing costs, which can be insanely expensive for compute-intensive applications and just as expensive for scaling heavy-use applications. Plus, you have to hire all the people, have the CapEx to support them, etc. In the decentralized crypto world, these third parties, the miners, validators, etc., provide the computing power that effectively run the platform in exchange for rewards in the token of that network. In the case of Polygon, they have validators. These third parties are willing to make this investment if they believe the network platform can grow the numbers of transactions on the network significantly. If they can, that pushes demand for the Polygon tokens they earn. That allows them to earn revenue from the sale of the tokens they earn, or they can hold the token and hope it appreciates if demand exceeds supply. Even better, platforms like Polygon will allow pretty much anyone to stake their Matic tokens with those validators and share in the earnings of the validators. Here is a nice guide from Coinbase on what staking is. And he's got a link to this blog post on Coinbase. That is help.coinbase.com. You can find all sorts of beginner guides to crypto there. Validators love stakers for a variety of reasons, but they are willing to share their earnings because the more they have staked, the more rewards they can collect. It's a symbiotic relationship that also helps secure the network. Why is this so brilliant? If Polygon or any of their competitors took a traditional centralized business path where they controlled and owned everything, they would have had to raise not just millions, but potentially much, much more. Instead, they create a near zero cost token that they distribute in accordance with the tokenomics they define to their community and whose approval is required to make any changes, and it works for all involved. The crazy part of it all is that because these businesses are token driven and the costs are distributed and operations are decentralized, it is far less expensive to operate than a traditional centralized business. So where a crypto-based business competes with a traditional business, the crypto business may have a significant cost of capital and cost of operations advantage. There are a lot of financial institutions that should be concerned. So how will Polygon build their transaction volumes and fees? By having enough widely and heavily used applications. Every platform, whether it's an exchange or blockchain, is in a race to achieve a network effect. The more users they have, the more fees. The more fees, the more they can invest to get users. The more users, the more fees it has to share, the more valuable its token, etc. All right, so I thought that was a very good and clear explanation of the advantages that DeFi and crypto has over the traditional finance market or tech startups or whatnot. Now let's get into some of the nitty gritty, and this is where Mark reveals some of the DeFi stuff that he's doing. The business of DeFi. One way Polygon tries to create a network effect is via DeFi, and he includes this link here, which will take you to an article on Nasdaq.com, which is what is DeFi and why does it matter now? As the name implies, DeFi is built on financial services. Consider Dave & Buster's tokens. When you buy their token, you can use them in their arcades. You can't use them at others. One of the foundational businesses of DeFi is the ability to exchange the tokens of one project to those of another. That's why we call them exchanges. And if the exchange is decentralized, they call it a DEX. Examples of such exchanges that I use are Zapper.fi, and as Mark says in the brackets here, not a true exchange, but great for tracking and swapping. And I'm an investor, so had to get it in there. Well, I actually had no idea that Mark Cuban was an investor in Zapper, but I actually use Zapper. I think it's great. All you have to do is connect your MetaMask to it, and it tells you everything. And you can do trades on it. I don't do a lot of trading on Zapper, but I like to track what's going on with my various MetaMask wallets through Zapper. Free service. So I'm not an investor in it the way that Mark Cuban is, but I do recommend it. It is a great service. But the other DEXs that he mentions here that are actual real DEXs are Quickswap.exchange, Bancor.network, and Uniswap. And as he goes through and explains what he's doing on these platforms, we will take a look at each of these in this video. They are basically the same business. They are token exchange. They make money from fees every time someone exchanges one token for another, but that isn't the brilliant part. In a money exchange business or even a banking business, you have to have the financial depth to be able to offer the range of needed currencies and services. You need to be able to afford to hedge the risk of pricing volatility between currencies. If you want to do this business with scale across the world, it can be very expensive and risky. Not for DeFi exchanges. What makes running a DeFi exchange so much better than a traditional centralized financial business of this and any kind is that rather than the owners of the business, investors, and their creditors putting up capital for all the transactions to take place, liquidity providers, LPs, do it for them. And he links to this Medium article by pintail called Uniswap a good deal for liquidity providers? All right, this is where we get to the juicy stuff where Mark reveals some of the stuff that he's doing. He says that he is a small LP for Quickswap. He provides two different tokens, DAI and Titan, that enable Quickswap to offer swaps between these two tokens. All right, so let's have a look at this pool. This is the DAI Titan pair right here. Right now it has a total liquidity of 94,000. We'll see as we go through the blog post what Mark put in, but this is what he's talking about. He's put in this pool some DAI and some Titan so that anyone that goes to Quickswap, which is this DEX here on Polygon, and I haven't used Quickswap yet, but it's super, super popular here on Polygon. It's the most popular DEX on Polygon right now. It looks essentially like a Uniswap clone. I assume that they forked it from the version 2 of Uniswap. But basically, if you came to Quickswap here on Polygon and you had some DAI and you wanted to trade it for Titan, you're essentially using the pool that Mark Cuban has added liquidity into. So he goes on to say, this pair is one of many, and you can also see that based on the 0.25% of volume in this swap that Quickswap pays, my return on my initial 75,000 investment based on fees only as of this writing is an annualized return of about 206%. And that's based on the fees earned in the last 24 hours. This return percentage will vary all over the map depending on the activity. So if we go back to the pool here, based on his blog post, so he put 75,000 of this 94,000. There were over $160,000 worth of trades in this pool, and these were the fees collected over the last 24 hours. So anytime someone uses this pool, whether trading DAI for Titan or vice versa, they have to pay a fee. That fee goes to these liquidity providers like Mark Cuban. And for the last 24 hours, almost $500 in fees were paid out to all the liquidity providers of this particular pool. And as he says in his blog, this is just one example of one pool of two tokens. There are many, 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 many of these pools. The bigger DEXs like Uniswap have essentially every ERC20 token available on it. He goes on to say, but the cool thing is, well, I don't get any extra rewards for this pair. I am currently the only LP in this pool, so I get 100% of the fees. In every pool, the LPs get a percentage of the fees based on the percentage of the liquidity that they provide. So obviously, since people have been reading this, they have been adding liquidity. He is no longer the only liquidity provider. As he said, he put 75,000 in. Now there's 94,000. But when he was writing the blog, he had put 75,000 in, and that was all the liquidity in this pool. So any fees that were generated, he was getting all of them. Now he's sharing those with these other people that added liquidity since reading his blog, I imagine. So in exchange for providing the liquidity both Titan and Quickswap need for their businesses, I get 0.25 of the transaction volume for swaps between these two tokens. As long as I keep making a good return, I will keep my money invested. If not, I can immediately withdraw it. Have enough LPs, and the exchange is far more capital efficient than in similar traditional exchange businesses, and I get to make some money. All right, so that is Mark Cuban strategy number one. He's using Polygon as his major network. He's added liquidity to DAI and Titan in that pool here on Quickswap. That is Mark Cuban DeFi strategy number one. So let's move on to the second thing that he's doing. In addition, exchanges will often offer LPs additional reward tokens. And he's got an example of this here because he also provides liquidity on Bancor network as well to get rewards in their BNT token. So they allow LPs to do single or double-sided liquidity providing and offer great rewards in their BNT token as an incentive to use their platform and to protect against token pricing volatility. Their rewards may not be as high as other platforms, but they are an easier platform to use and do a great job of protecting LPs who keep their liquidity in place. Okay, so let's have a look at the second thing Mark Cuban is doing. This is Bancor. It is another DEX. And if we go into Bancor here, this is what it looks like. These are the various pools. And as he says in his blog, one of the things Bancor allows you to do is add both tokens or only one of the tokens of the pool. So in this case, USDC BNT, you could either put some USDC or BNT or both. So some dexes like Uniswap, you have to put the equal amount of both tokens. Bancor, you do not. And then the rewards he's talking about is right here. So in this rewards column, you can see that if you added liquidity to this pool, again, the USDC BNT pool, not only are you sharing in the fees when people swap within this pool, but you're getting rewarded extra. And in this case, you're getting an APR of altogether just under 7%. And it's broken into about 77% of BNT and 36% of USDC. So on some dexes like Quickswap, you're only getting the fees. On some like Bancor, you get the fees plus this incentive reward, and that is what we refer to as yield farming. So DeFi strategy number 2 that Mark Cuban is doing is yield farming on Bancor. All right, he goes on. One thing to note is that the competition between exchanges is brutal. The rewards have to be high because it is truly a laissez-faire market. Exchanges compete heavily for LPs. So you have to be careful if you choose to be an LP. Unless you are very experienced as an LP, make sure to do your own research. Make sure the platform has a legit business. This is key, guys. There are a ton of dexes out there. Some of them are super legitimate, have been around forever. Obviously, the ones that he's using are some of the biggest on the various networks that he's using. But there are a ton popping up every day that promise you all sorts of crazy rewards. So you just gotta weigh the pros and the cons of those ones and know the risk before you go into anything. All right, so that was strategy number 2, his yield farming. Let's move on to number 3. And he says, let's look at another DeFi business, Aave. Aave, like its competitor Compound, looks like a bank, but it's not. Nowhere close. Aave is a completely automated, permissionless platform where there are no bankers, no buildings, no toasters, no vaults, no cash, no holding your money, no forms to fill out, no credit ratings involved. Everything is controlled by smart contracts. It's fully automated. You don't have to get approval from anyone, and it takes minutes to take out a loan. This is called being permissionless. This approach is the future of personal banking. So what business is Aave in? They are in the business of making it easy for people to loan and borrow. Every time someone deposits tokens, the depositor gets paid an amount of Aave tokens that reflects their share of interest earned by the total pool of depositors. And sometimes tokens like Matic as an incentive to use Aave on Matic as opposed to Ethereum or other networks. Every time a borrower borrows, say that 5 times fast, they pay the algorithmically set rate. And what is really different, sometimes the borrower gets paid a reward as well. And we'll talk about that because Aave and comparable platforms want you to use the platform early and often, particularly when it's still a startup and trying to attract depositors. They will reward you for being a user. And of course, with every transaction, Aave gets paid a very tiny fee, and they make money on the spread on loan interest that is not distributed to the depositors. I should add that the underlying network, whether it's Ethereum, Polygon, Matic, or any other, also earn a fee on every transaction as well, which is why they often contribute to the user rewards. Now it's time to put this in context. As an automated depositor to borrower matchmaking service, there are no buildings, no huge departments, no branches, no paperwork, no approvals, no confirmation calls to make. All that matters to Aave and their competitors is volume. They can make a fortune for their depositors and token holders because their overhead versus their revenue is minuscule. Automated financial market makers are so much more capital and operationally efficient than similar traditional companies. Banks should be scared. And Cryptowisers, this is the whole point of me going through in such detail. Hopefully it's helping some of you who don't know a lot about DeFi, but the most important part about this is you have Mark Cuban, someone who has been hugely successful in traditional finance and business, looking at crypto, looking at traditional business and saying, I don't see how traditional business and finance is going to be able to compete just because of the basic expense versus revenue business model. So to see someone like Mark Cuban so plainly outline this, articulate it with such clarity, if you still don't believe in the future of crypto and DeFi after reading this, I'm not sure what will change your mind. All right, let's have a quick look at Aave here. One of the biggest DeFi projects in crypto. It's got 21 billion. That's billion with a B dollars locked in liquidity into all of the Aave platforms. And when you go inside Aave here, right up here, you can go to Aave version 2 or the original Aave. These two are on Ethereum. I've got it here on the Aave Polygon tab. So Aave also has Polygon as an option. That is what Mark Cuban is talking about, I assume. Basically with Aave, you can deposit any of these and get interest, or you can borrow. And this is the thing, they will also pay you to borrow money from them because they are trying to attract users, because the Polygon network is new. They're trying to move people over from Ethereum to Polygon. And that's why you have seen so much success with Polygon so far, is because you can actually make money by borrowing money right now. The incentives are so crazy. Now, this is going to change, and it obviously changes day to day, but they've put some extra funds so you can earn Matic right now if you either deposit or borrow from Aave, because Matic wanted to get Aave onto their platform so that people would start using Polygon. And Aave is such a popular dApp that they wanted it on their network, and so to do so, they've added extra incentives so that people will use Aave on Polygon instead of Ethereum. So that's what Mark's talking about. You can make money by just depositing. You can make money by depositing and borrowing, all sorts of things that you can do here on Aave. And the other similar platform that he mentioned is Compound, which is a competitor to Aave, very much similar ideas. So that is DeFi strategy number 3 by Mark Cuban, taking part in these automated financial market makers. So by lending or borrowing money, you can make money in DeFi. All right, so those are the 3 platforms right now that Mark Cuban is using. The 1, 2, 3 Mark Cuban DeFi strategy right now. So let's quickly go through his review here. Basically, traditional centralized businesses raise capital first, start a business, and then hope to make enough revenue to return enough capital to their investors and or founders to make them happy. In the crypto DeFi world, organizations don't require near as much capital to start and operate. Rather than raising money in traditional sense, they can sell tokens to raise capital. They can reward liquidity providers instead of having to raise liquidity for financial transactions. They can reward stakers who support validators. They can operate on a blockchain where most of the CapEx infrastructure and much of the critical security is provided by miners or validators. They can build communities that replace layers and layers of bureaucracy. And what I'm about to say is what makes the crypto world so dramatically different and why it's a model for future technology businesses and possibly all businesses. Profits are of no use. There is no company I have mentioned that thinks that they have to make profits to put in their owners' pockets. There is no reason to financial engineer and manipulate EPS. This isn't to say that they don't have to cover the costs they have. They do, but their mission is not to maximize profits because in almost every crypto-based organization, they are decentralized. Every token is created equal, no matter who owns it, and every token owner gets to participate in the community. Yes, bigger owners get more votes, but there are no multiple classes of tokens. There aren't VCs or founders whose tokens get priority treatment, as with stocks, at least that I know of. Decentralized and automated completely changes the game. That's not to say that every crypto blockchain or DeFi project will work. They won't. These facts are not a secret in the crypto world. There is an incredible amount of competition. So much, in fact, many, if not most, will not work. They will not get enough users to generate enough fees to succeed. And then he gives a link to cryptofees.info, which gives you a sense of the daily fees that every DEX is getting or every DeFi platform generates, and then the 7-day average. Ethereum number 1. Those are obviously just the network fees. Uniswap, still the king of DEXs. You got version 3 here at number 2, and then version 2 here at number 4. Binance Smart Chain still generating a lot of fees. Still got a lot of participation on Binance Smart Chain, even though Polygon has gotten a lot of market share in the recent weeks. But I agree with Mark Cuban. This is a great site. Great reference, cryptofees.info. Crypto is brutally competitive, but in crypto versus traditional centralized businesses, all other things being equal, I'm taking crypto every time. So how do you value a blockchain or DeFi project? It's the revenues, stupid. Not all that much different than valuing a software business. And now he outlines what he looks for in a DeFi project. Revenues, growth rates, defensibility, and the strength of the community. Those are the 4 things that he lists. And he says if he thinks a platform can continue to grow as fast or faster than the crypto industry as a whole, it has my attention. If they are vaporware talking about what they are going to do, but years in and have still done nothing and have no revenues, I get concerned. When I buy a token as an investment, as I have with Ethereum, Bitcoin, and others mentioned above, I know there's going to be pricing volatility. But like the early days of the internet, sales cured all. Have happy customers who are willing to pay for the goods and services and application offers, and a community that will grow and be supportive. And you have me as a longtime holder who will stake and possibly LP those tokens. Well, there you have it, kids, right out of the mouth of Mark Cuban. If you got friends in the traditional finance industry telling you there's no way for you to value crypto, send them here. Send them to this video. If you are someone getting into crypto for the first time or DeFi for the first time, look for those 4 elements. Listen to Mark Cuban. And quickly going over the ones he is in right now, he is heavily in on the Polygon network because of the low fees. He's added liquidity to Quickswap liquidity pool, the DAI Titan pool. He's also added liquidity on Bancor and is getting the Bancor token rewards. He's an investor in Zapper, and he's doing some borrowing and lending on the Aave platform, most likely on the Polygon network again. Well, there you have it, folks. That is Mark Cuban's DeFi strategy. I don't normally go in such detail over one blog post like that, but I thought it was a really important one. I thought he articulated very well the argument for crypto versus traditional finance or traditional business. A lot of great insight in there, and very interesting to see the platforms that he's using. Personally, what am I going to do? Well, I do provide liquidity on many dexes, Uniswap being the biggest one, and PokeSwap, which just launched a few weeks ago. That is one that I also have a lot of liquidity in right now. So I'm not going to put liquidity in Quickswap, but I am going to move over to Polygon to do some stable coin yield farming. I'm going to do it over on Aave. I've also started doing some stable coin yield farming on Zapper.fi, which is both on the Binance Smart Chain and Ethereum networks. It's a little known site. They are a sponsor of the channel. I've done a video on them before. I like them. They're a smaller platform. Not a lot of people know about them, but I'm getting some good yield right now on stablecoins on Zapper.fi. I also have a ton of more higher risk yield farming going on Binance Smart Chain. That's kind of dried up for the moment with the crash in the market, but I do have a small bag for higher risk yield farming, and so I'm always on the lookout for the next big yield farming play, just for my small bag that I like to play around with. But because I've invested so much of my stablecoins into the market in this recent dip, I'm looking to build up my stablecoin bags over the next few weeks to replenish those stablecoins. And so that's why I'm going to start using Aave on the Polygon network and also Zapper.fi on the Binance Smart Chain. All right, Cryptowisers, hope you enjoyed learning about Mark Cuban's DeFi strategy. If you did, please do me a favor, smash the like button on this video. And if you're not a subscriber to Cryptowise, now is as good a time as any. Subscribe to the channel and make sure you hit that notification bell. Until next time, Cryptowisers, my name is Milton, saying over and out.